Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're doing part 7 of stock market terminology that every investor must know. Now, in today's video, I'm covering actually 12 terms today, where I usually cover 10 just because a couple of the terms are very simple, very easy. You guys will probably know them before I even explain them to you. And today's video, we're focusing all about on when you actually are trying to buy a stock or sell a stock in terminology you need to know once you create a brokerage account and you're actually trying to go to buy a stock, or when you're trying to go to sell a stock. So that is the whole focus of today's terms. I try to keep it simple like that, so let's get right into this, guys. First term is bid. Bid, what a bid means is that is the price that people are bidding, trying to buy those shares for. So say the stock is at $14.20. People might be trying to buy that stock for $14.80. So the bid might be $14.80. So that is what a bid is. And the ask is, which is term number 2, the ask is the price that people are trying to sell it for. So if the price is currently $14.20 and people are trying to bid $14.80, the ask price might be $14.22. Now, sooner or later, those two numbers have to come together to trade at an amount. So they're going to have to come to meet $14.20 or meet something in between at some point. Otherwise, the sellers are never going to sell their shares and the buyers are never going to get to buy their shares. So sooner or later, they end up having to merge, which is then the current price that it comes out, which is $14.20 or whatever. So the bid, once again, that's the price that people are trying to buy it for. The ask is what people are trying to sell it for. And just a quick reference, I guess you could say, whenever I'm trying to buy shares, I usually bid above the asking price, so I can just make sure I get the shares. Because sometimes, the thing I hate is sometimes if you are about to buy shares and you try to bid something lower than ask, and the stock price moves up, and then it moves up, and then it moves up, and then it's 25 cents a share above what you wanted to buy it at, because the price just ended up happening to go up right away. So I always try to put in my bids 2 to 3 cents above what the current asking price is, just so I can make sure I get them. I'm not going to quibble over that 2 or 3 cents. You know what I mean? If I'm a long-term holder, I don't care about that. And I would rather pay that than see it go up 25, 30 cents over the next hour and then have to raise my bid 25, 30 cents. And then I'm paying a lot more for the shares at that some point. So that's what I do. You guys may want to do that as well. Term number 3 is buy. So it's simple. When you go to place an order in whatever brokerage you have, TD Ameritrade or Fidelity, E-Trade, Scottrade, whoever, Charles Schwab, and you want to buy shares, you have to click the little bar and then click buy. That means you're going to buy shares. You're planning on purchase shares. Sell is pretty self-explanatory. These are the two terms I said were pretty simple. A sell just means you're trying to sell the shares. So when you click on that little bar and you click sell, that means you're going to sell your shares. You're getting rid of them. And you can choose however many you want. Then there's going to be another bar that usually the 3 terms that pop up are buy, sell, or sell all shares. That's usually the 3rd term on most websites that come up. That just means you're going to sell every single share you own in that particular stock. So say you own 100 shares of Apple, AAPL. You can click sell and then click however many shares. Maybe you only want to sell 50 or something like that. But if you just want to sell them all right then and there, you can just click that sell all shares tab, and then all 100 shares will sell and you can set your price. Market order. Market order, so once you set whether you want to buy, whether you want to sell, or whether you want to sell all, then the next tab down will be on what type of order you'd like to place. A market order, which is our next term, a market order means that you just want to either buy those shares or sell those shares at whatever price you can get at, whatever price the market's trading at. So if that stock happens to be trading at $14.20 right now and you put in that order, you're going to either buy them or sell them at $14.20. It's just dependent on whatever the stock price is at that particular time. You're not picking the price really you want to sell them at. You just want them sold ASAP, right away. Next one is a limit order. A limit order means that you want to sell it at you want to buy or sell at a certain price, and you don't want to either pay more than a certain price or you don't want to sell below a certain price. So if a limit order, so say we're going back to that shares at $14.20 and I want to buy, I could put in a buy order at say $14.10. and that's my limit order. So I don't want to pay anything above $14.10. So I'm just hoping the stock will drop, and then once it hits $14.10 or below, my shares will immediately buy at that time. And nothing above $14.10 will get bought. Same thing on the sell side. Say the share's at $14.20 right now, and I put in, I want to sell them at $14.30. If that stock price then goes up to $14.30, then right away those shares will sell. And they will not sell for anything under $14.30. Next one up is a stop loss. A stop loss is like, say you want to go ahead and sell shares, and you don't want them to go down a certain amount. So if I go in and I place an order, or a sell order that is, I go in and place a sell order, I could put in the order at a certain price. So say we're at $14.20 and I'm like, earnings are tomorrow, and if that stock goes down a lot, I don't want it to go down more than like $13.50. If it goes below that, I want them just sold and get rid of them. I could go in and put a stop loss at $13.50. And so if the shares drop below $13.50, all my shares will just sell. They'll all sell right then and there. So some people like to do that. I don't personally like to do that, because say that stock dropped to $12 or something that day, and it dropped really fast, and by the time the market opened, it was already at like $12.20 or something. Did I really want to sell them? And the day before they were $14.20? Personally, I wouldn't do that, but some people do that. They put a stop loss on. Sometimes they succeed. Sometimes they end up selling for a bad price, and then the stock ends up going back up the following day or whatever. Next term up is buy to open. This is in reference to stock options. So if you're trying to buy options, buy to open means you're going to open a position in options. You're going to buy at least one contract or more of options. So that's buy to open. Sell to close is when you're going to sell and you're closing out that option position. So you're selling whatever amount of options you have, and you're closing the position, and that position is done. Sell to close. Next one is time in force, and this first term is day. So this is a term that comes up underneath the whole market order, stop loss, all those terms. The next one up will be time in force, and the day one means that by the end of that trading day, that order will expire. So if that order didn't go through for whatever reason, then that order will expire that very day. Whereas in time in force, good till canceled, if you click on that term, that means that order is good for a long time. Most brokerages will make that order good for at least 3 months. So you can have that in there for at least 3 months, and it's good until you cancel it. And until you cancel it, or that 3 months or 4 months or however much comes up, the order's still in there. So sometimes if you put an order like a stop loss or something, you need to remember, oh, I got that order in there, if you place a good till canceled order. I hope this helped tremendously, guys. We knocked out another 12 terms today. We're on part 7, stock market terminology every investor should know. If you guys really like this, hit that thumbs up button for me, please. And leave a comment if you have any questions on any of these terms discussed today. Subscribe if you haven't. I talk a ton about personal finance. I talk about business. I'm an entrepreneur. I talk about entrepreneurship. And we talk a lot about the stock market. And we do this series every single week on stock terminology every investor must know. Thank you guys, and have a great day.